Hello friends, I welcome all of you to your own YouTube channel, World of Trade and Finance. Friends, if we talk about a regular personal loan, then there is a fixed EMI that you need to pay throughout the tenure of the loan. Next is that you cannot reuse it. So the amount gets credited to you once, but you have to keep paying it till the last EMI and cannot use it anytime in the between. And the third is that every EMI contains both principal and interest, which is equally distributed till the last EMI. However, there is a product that can provide you flexibility on all these three factors. That product is called as a personal loan overdraft, or which is commonly called as OD. So friends, what do we get in a personal loan overdraft or an OD? Firstly, the interest calculated on a personal loan overdraft or an OD is calculated on a daily basis and you only pay the interest. Secondly, it's a revolving credit and you can repay and reuse this facility, which is not there in case of a personal loan. And thirdly, you have the flexibility of paying a variable EMI. So if you want, you can pay the total amount due. If you want, you can pay principal plus interest, or if you want, you can just pay the interest. So friends, let's first try to understand the features and common terms that are used in a PLOD. The first point is called facility amount. It is just equal to the loan amount. It indicates what amount of OD facility has been assigned to you. The second is the tenure. Now OD is generally of two types. One is of 5 years and one is of 7 years. Third, who offers OD? OD is offered by all major NBFCs and banks. You may check with your NBFC or bank. The fourth point is fixed line tenure. So this is the tenure when only interest is levied. So if you have an OD of 5 years, then the fixed line tenure would be of 1 year. If you have an OD facility of 7 years, then the fixed line tenure would be of 2 years. The next is drop line period. This is the period when both interest and principal is charged. So if you have an OD for 5 years, then the drop line period would be 4 years. And if you have a OD of 7 years, then the drop line period would be 5 years. The next point is IRR or ROI. This is nothing like an interest rate. This is just like an interest rate in case of a personal loan. The same in OD is called a IRR or an ROI. And the last thing is called as monthly drop down amount, which is nothing but sanction amount divided by the drop down tenure. I'll clarify this calculation in an example later. So friends, let's try to understand OD with an example. So let us assume that you have been sanctioned an OD of 10 lakh rupees for a tenure of 5 years. So for this OD, the fixed line tenure would be of 1 year and the drop down tenure would be of 4 years. If the same OD was sanctioned to you for 7 years, then the fixed tenure would have been of 2 years and the drop down tenure would have been of 5 years. The rate of interest or the IRR is 15%. So the monthly drop down rate, which is the sanctioned amount divided by the drop down amount, which is 10 lakh, the sanction amount divided by the drop down amount, which is 48 months, not the total tenure, divided by the drop down tenure, I'm sorry. So it would be 10 lakhs divided by the drop down tenure, which would be 20,833.33. Where this monthly drop down tenure is used or the monthly drop down amount is used, I'll explain that later in this video. But before that, let's also understand the interest calculation in an OD. So firstly, let us say for the same OD, if you have been sanctioned a limit of 10 lakh rupees and the IRR or the rate of interest is 15%, then the yearly interest would be 15% of 10 lakh rupees, which is 1,50,000 rupees. So now that you have the yearly interest, the monthly interest would be the yearly interest divided by 12 months, which would be 12,500 rupees. And the daily interest would be the yearly interest divided by 365, which would be 410.95 rupees. So friends, one very important thing you should know about OD is that in an OD, the interest is calculated on daily basis and it is calculated on the amount that you have borrowed. So let's say if you have taken just 1 lakh rupee out of 10 lakh rupees, and let's say you have taken it for just 10 days, let's say from 5th of the month, and you repay it back on the 15th of the month, then the interest would be levied only on 1 lakh rupees and it would be calculated only for 10 days. So you will pay the interest only for 10 days. So friends, let us understand the OD calculation in case of the fixed tenure. So let us say for the same OD, that OD has been assigned to us with a limit of 10 lakh rupees. So, and for a period of 5 years. So in this case, the fixed tenure would be of just 1 year. If the same OD would have been assigned to us for 7 years, then the fixed tenure would have been of 2 years. So the fixed tenure is the period when you are only charged interest and there is no principal that is charged to you. So before calculation, let us say that we have an OD at 15% interest. We calculated in the previous slide that the monthly interest was coming around 12,500 rupees. Here the assumption is that let us say we have utilized the complete amount. So we have a limit of 10 lakhs and we have utilized complete 10 lakhs. The interest that we pay per month is 12,500 rupees and there is no principal that is charged. So the EMI every month is of 12,500 rupees and that the EMI will remain same assuming that we don't repay anything back. That EMI will remain same throughout the fixed tenure of 12,500 rupees. Once the drop down tenure, the fixed tenure ends and the drop down tenure starts, the rotational limit will start reducing every month by this amount of 20,833 rupees, which we calculated in the last slide. How that affects the EMI and the principal, that we'll see in the next slide. So friends, now let's understand the drop down tenure. Now the fixed line tenure is over. Now the second year has started. The fixed line tenure was for just 1 year. So in the 13th month, the limit that was assigned to you earlier, 10 lakhs, would reduce by 20,833, which is 979,167. And interest is still charged on the previous month, so the interest remains the same. And the principal is fixed, which we calculated 20,833. This becomes the principal. So the monthly deduction for the first month would be the principal plus the interest, which is 33,333 rupees. For the next month, the rotational limit will further reduce by 20,833 and interest would be charged on the next value of utilization, which is on this value. And if you charge 15% at this value per month, it would come out to be 12,240. The principal remains the same and the total EMI is the sum of the interest and the principal, which is 33,073 rupees. So every month the rotational limit is reducing by 20,833 rupees and the principal remains the same. The interest is charged on the revised utilization limit and the total EMI is calculated, and this keeps on decreasing till the last EMI that is paid. That is the end of the 5 years. So friends, let's also discuss the positives and negatives of PL overdraft. So what are the positives of the PL overdraft? The first is that you pay only the interest during the interest period. So if you have an OD, so during the fixed time tenure, you only pay the interest. The second is the variable EMI. So you can pay more, you can pay less, you can pay more than the interest, you can pay equal to the interest, you can pay back the entire amount. So that's another advantage. The third is in an OD, the interest is calculated on a daily basis. So if you need some money just for 5 days, you pay interest only for 5 days. Fourthly, you pay interest only for the amount that you are using and you don't pay interest for the entire OD amount. So if you have an OD of 10 lakh, you use just 1,000 rupees, you pay interest only for the 1,000 rupees. And one big advantage is that OD is a revolving credit, so you have a pay and reuse model. And the last advantage of an OD is that you can have OD as a financial backup if you are foreseeing expense a major expense in the future, you can get an OD sanctioned and keep it as a financial backup. What are the negatives of the OD? The first negative is that OD is generally sanctioned at a higher interest charge. If you look at a PL or a personal loan, if you're having a good credit score, if your documents are okay, then a personal loan can even start at 10%. But OD generally starts at 13% or higher. So OD firstly has higher interest charges. The second limitation is that OD always carries an annual maintenance charge, which is approximately 0.25% of the OD value. And these charges are incurred regardless whether you are using the OD or you're not using the OD. And the third limitation of OD is that if you use that OD unwisely, then that can lead to an interest only trap. And after the fixed period is over and the drop down period starts, you might feel that the EMI has suddenly surged because you have been paying only the interest during the interest free period, assuming that you have utilized the entire OD. And suddenly the entire principal is now adjusted into the balance of tenure, which is either 4 years or 5 years. So you might feel that suddenly the EMIs has increased. That is one of the limitations of OD. So friends, that's all in this video. In this video, I only wanted to share what a PLOD is, what are the features of PLOD, how is interest charges calculated in an OD, what are the advantages and limitations of an OD. If you've liked this video, friends, I request you to subscribe to our channel, like the video, comment on the video, share it with your family and friends. I'll be posting more such videos in the future, so I request you all to stay connected. Till then, stay happy, stay safe. Goodbye.